let's have a look at the daily process flow, how all the different setups fall into place, and what I do in the morning and what I do during the day, kind of a thing. So you have to understand that as a full-time trader, I'm looking at optimizing my time to find as many opportunities as possible and make as many trades as possible also, and to find ways and means to make money even if some of my setups are not working, then going on to another set of default setups. So the first starting point really is the anticipation. Any day when I'm coming into any day, I always have anticipation setups. Like today I have around 17 anticipation setups, and those are my number one priority because I've identified some of these setups. I know where I'm going to enter. I have thought through what I'm going to do. So these are bullish and bearish anticipation setups, which I'll be some of these I already have orders in place for entries based on where they closed yesterday and what is their last 3-4 days action. So these are the anticipation setups. This is my number one priority. But here, you don't have to do much in the sense. Most of the time you just have to put in buy orders. Like say I have a buy order on this particular stock at a certain level here, and if it triggers, then I'm in the trade. These are some of the bearish setups which I'm watching. So this is what basically is my number one priority at the open, because most of these trigger in the first 15 or 20 minutes. Most of the good anticipation setups, if they're going to trigger, they trigger in the first 15 or 20 minutes. And so all this goes on to the trading platform. Orders are in terms of where I want to order. So that's the first thing which I'm looking at. Then in addition to this, there is always news. So I would have looked at any earnings news in the night, in the morning, and anything which is gapping up in terms of for that I use trade ideas. So in the trade ideas scanner, I've been looking at things which are up 3-4% on a higher volume, like 50,000 plus volume, and that's the window which I always have open at the open. So based on what is going to be gapping up, I would have determined if I'm going to make a trade, like you've seen, when I made that trade of Snap, it was gapping up. In fact, and I made that trade in the aftermarket itself, and in one day the trade paid off, because in one day itself it made 47% move. So those kind of opportunities, if they are in the market, you're always looking for based on news. Those are news plays. Okay, now so this is the core of basically this is what is the core of what I do nowadays, which is basically try and anticipate and get in as much as possible closer to the as soon as they start breaking out. So these are things which are there. Okay, now in addition to this, if something doesn't trigger at the same time, I have all my scans. I have the dollar breakout, dollar bearish scan. I have the dollar breakout scan. I have the 4% scan. And in order not to go through 4 or 5 of these, there is a combination scan, which is a bullish intraday, 4% bullish intraday scan, which is basically looks for which is designed to find the 4% breakouts before they will hit the 4% breakout screen. So this is the screen which I would basically look at. And if somebody wants to find out, this is basically US common stock, American depository receipt, and ETFs. And I also in the learning area, you'll find a scan for this. So basically it looks for something which is up 2% on a 75% of the volume compared to yesterday, and basically up or down to percent. So basically it allows you to quickly in the morning, when if your anticipation doesn't trigger, or once your anticipation triggers, you're looking at other additional trades. So I run this scan continuously and I look at opportunities from this. Similarly, I have a combination scan for dollar breakout, because dollar breakout again is a very, very profitable method, because it allows you to find trades where your stop is very close. So for that I use a combination scan where the stock is either up or down 90 cents on a 100,000 plus volume. So in the morning, if as soon as the market opens, these scans, they run automatically. You don't need to do anything. So you're just looking at opportunities. So if you don't find something in anticipation, or if something triggers in anticipation, there is additional capital. I always have additional capital. So I'm looking for additional trades. So it will come in from either dollar breakout or 4%. Now, if I don't find something in them, then there are other things which I use, like the lower threshold breakout. Lower threshold breakout is something which I start looking at in the first half an hour, 1 hour. This looks like a lot of things to look at, but like once you have a very good process, it's not so difficult, because you're just like and when you run it in the morning, you will hardly have 20, 25 stocks or 15 stocks in most of the scans. So it's not too much of an effort. But combination of these processes give you buy an idea. And in addition to that, the existing trades, there is always like, and I have already know on my existing trades where I want to exit, or like, and where do I want to move the stops. So it's a combination of these processes which run, and all in all, once you run this set of processes, you will find that you will have trades. Most of the time, you'll have more trades than you can manage in terms of your capital. So you never run out of ideas, and if the market changes, then you can little bit change, like say, if the market has been very volatile, so for many days in the last couple of days, I didn't really look at anticipation as my major strategy. I looked at like trade ideas, and whatever was hitting trade idea screen, I was looking at those as trades because of the market volatility. So the idea is to look, and if something doesn't work, you just don't sit there and sit on hand and say, okay, I'll wait for an ideal situation. There is never going to be an ideal market situation and ideal situation to trade. If you're a full-time trader, you have to adapt to the market, or you have to anticipate what kind of a market phase we are going to be in, and then accordingly change your strategies or change your setups, or like tactically get out at a lower profit points, because a lot of things, if you see yesterday, a lot of the trades faded after they being up for the day. From entry by 2 o'clock, most of them started trading. So like, and moving the stops aggressively helped in that particular case. Like something like this faded, but like, and I already had moved my stops so close to the high. By when it faded, I just got out with the profit. So that's how you manage the process. But the key really is like, barring like in these processes which I am running, I'm not going to be like, and I basically get distracted, or I'm not going to be like, and somebody says something in the morning on Twitter or something CNBC, I'm not going to go and start doing an R&D or put a new setup or start looking at something. The whole process is set. These are the only things which I, as of now, trade, and there is a certain amount of process flow to it, and the process flow produces more trades. Most of the time it produces more trades than I can handle. So I don't see the need to chase an idea. And especially like, I see a lot of times people like see something in the morning and they start like putting a scan together, or they're trying to put together a method in the morning. That is a not an ideal use of your time, or you don't have a process flow if you're constantly chasing other people's idea or chasing things like that. You have to have a very set process and follow that process. And if you have to add something to your setup process, I always like, and if I find something and if I have to add to those processes, then I work it into the process without disturbing the processes too much. So I've been like trading this new setup, which is basically highly liquid stock, as the capital, like as my amount of capital which is available for me to trade has increased substantially, or keeps on increasing as I grow my accounts, or like because of using margins and all. So I'm looking for more liquid setups. So I created this setup, but it is again part of the total process flow which I use. Basically, this setup looks for something which breaks out on a 9 million plus kind of a volume. So that's basically, it is again a part of the process which I use, and it will be part of the things which I would go through by around 10 o'clock. I would go through this scan in part of my process, so that if there is something which is a big breaking out on high volume, where you can put in like lots of capital, or you can buy say 10,000, 20,000, 30,000 shares without worrying too much about stops and all, then I'm looking for that in this particular scan. Now that scan is also part of the daily process which I follow. So what are the daily processes or the scans which I will use? I use dollar breakouts, which is always will be there, 4% breakouts. IPOs, I always will have. In IPOs, I found that doing a lot more like anticipation is much better than actually buying breakouts most of the time. And then there are other things like the low threshold and all. If you cannot find trades in 4% or in dollar breakouts or in anticipation, then you go to low threshold breakouts. And this process loop runs throughout the day. So, and as a result of running the process loop, you constantly get trade ideas based on like something triggers. Either your anticipation trade triggers or 4% breakout triggers or dollar breakout triggers, and then you enter as and when the trade shows up. Most of the trades show up in the first half an hour, and if you enter, then like it becomes, the process becomes in terms of managing the trades, in terms of where to move the stop, when to move the stop. Sometimes it makes more sense, especially in the market which has been going like this, one up day, down day, up day, down day. Is basically you have to aggressively manage your stops intraday, and that's all part of the process. So hopefully this will give you some idea as to how to put a process flow together and stick to a process flow even if you're changing your setups, or if incrementally you're always like going to be improving your setup by little bit of tweaks. It's like in a Windows, when it came out, it was like in a DOS version. Now it's like in a, there are so many versions of it, which is the same way your setup evolve, but the processes do not evolve too much. And also in terms of process flow, if you have a very streamlined process flow, trade should come automatically, like in terms of trade ideas, should give you a lot of trades than what you can handle. So think about it like, and put a process flow together. These are small little things which make you more productive. These are the things which make you money. Just like randomly going and looking at somebody's trade and taking a trade, or based on what somebody is tweeting, going and doing trades is not going to help you develop a process. And if you once develop a process, you'll find that profit is a outcome of following a process. So if you do a damn good job of following a process, the profit is something which automatically happens.